Hi, welcome to Promo Insiders, an ASI media podcast that covers the issues that matter most to the promotional products industry. I'm Chris Ruvo for ASI, and today my guest is Counselor's 2023 Person of the Year, Andy Shape, CEO of Top 40 distributor Stran Company. Andy is a promo lifer and a calculated risk taker who has never been afraid to go for it. This was especially evident in late 2021. That's when Shape took Stran public, listing the Top 40 firm on the NASDAQ. It was one of the boldest moves by an industry company in recent years, one aimed at vastly accelerating Stran sales and raising the visibility of promo as an industry. For this high-profile strategic risk and the ambitious growth plan that Shape has spearheaded since Stran's gone public, Andy was named Counselor's 2023 Person of the Year. Today, we're going to dig into his fascinating story. Andy, thanks for being with me.
Great. Thanks, Chris. Honored to be here and honored for the award. So thanks a lot.
Oh, you bet. You bet. Well earned. So, before we even get into some of the recent stuff, I always love to hear about people's backstory to kind of hear how they got where they are. So, you're a Michigan native. How did you end up running a company in the Boston area? How'd you end up in New England?
Sure. As you mentioned, I grew up in Grand Rapids, Michigan. Went to all through elementary, middle school, and high school there, and ended up I skied competitively and played football, and that was I said I wanted to do that in college. And there's not a lot of schools where you can do Division I football and division skiing. It's kind of a weird combination. So University of New Hampshire was one of the schools that was possible. I went out there and visited, loved it, and ended up playing football there and skiing. I ended up quitting football after 2 years because doing both was a little bit too hard. But
Sure.
and then went to UNH and finished school there and just stayed out in Boston and that's how I ended up here. And then met my partner Andrew Strandberg at the time at UNH. And we started from there, started this business after we got to know each other.
All right. So, so interesting. You kind of anticipated one of my next questions, which was, what career were you in before promo, and how long did that last? I know you and Andrew started this business kind of like almost as a side thing, if I'm not totally mistaken.
Yeah.
But you did kind of enter the professional world not in promo, but you decided to do kind of an about face to our industry. How did that all come about? What were you doing?
Exactly. So I was working in a high-tech PR job at a company called Copperthorne and Bellows, doing high-tech PR. And my big customer is EMC, which was a storage company. They're owned by HP now, but real big company back in the mid 90s. And I was doing that, and one of the things my job was to try to get editorial coverage for them, and I ended up getting EMC a cover on a cover feature story on Forbes magazine, which was a big deal. And at the time, I wasn't making very much money at all. And when I did that, when I got this cover story, I still wasn't making a lot of money, and said, "Boy, this is really." I'm working really hard and getting a lot of results. I'm not seeing it. So Andrew and I started talking to each other and said, let's start doing this as full-time jobs, because we had been selling holiday greeting cards, going kind of door to door. It's like you'd said, kind of as a side hustle, with the Birchcraft and the Carlson Craft binders. And we would go and say, who buys your holiday greeting cards? And 9 out of 10 times the person who was at the gatekeeper at the front desk said me, and they would say, will you buy from us? And they said yes. And then we said, let's continue to do that, but parlay that into who buys your pens, your t-shirts, your promotional items, and just started doing it that way. And we both ended up, quitting our jobs and starting this business and going from there.
It's such a cool story because, and we'll get more into this later, but Stran's essentially a $65 million company now. But it's cool to think about that. This starts as a side hustle. You're pounding the pavement in downtown Boston, right? Like that's
until
how
they threw us out.
started.
I mean, we'd walk around and sometimes we'd get thrown out. Hey, no loitering. You're not allowed to be here. Do you have an appointment? We'd say, nah. So it was definitely an interesting time running around. We'd put on a suit and tie and try to go sell holiday cards and then try to do more with it. So it's fun to look back at that, because I did think that really taught us as an organization the value of how hard it is to identify, acquire, and then keep a customer and expand them. So really, that's in our DNA, is looking at that as really respecting and appreciating how hard it is to earn a customer.
Yeah. Yeah, I mean, great. It's a baptism by fire in some ways, but it's like
Right.
talk about like a grassroots start and learning the business from the ground up. And you kind of mentioned a lesson there from those early days. I'm curious if there's other ones in those formative years that kind of stuck with you and that have been a good guiding light down through the years as you've grown.
Yeah, I mean, I think that's one of the biggest ones is as we continue to grow, is never lose sight of that is once you get a customer, you can't take them for granted. There's always people trying to get business from them and take that business from you. And if you're not always trying to make improvements and make it easier for them to do business with you, someone else is going to do it. So we really can't take that for granted. As we grow, we have to make sure that we push that down to all of our employees. And we're at about 140, maybe 150 employees now.
Yeah.
And we need to make sure that we have that same culture. So that's one of
Hmm.
the things as we learn is never losing sight of, client first, customer first, and
Hmm.
making it easy for them to do business with us.
All right. So in the early days, it's you and Andrew. Um, how do you go about growing Strawn? Like where does it go from you both kind of, I'm sure you were packaging orders yourselves to some degree
Yeah.
back in the day, things like that, to where you're starting to hire people, and how does that take us through that evolution a little bit?
Yeah, and we've done all like you'd said when we started. We said, "Hey, we can offer fulfillment to you." Our first big project was for Converse, and our fulfillment was literally in a garage that we
Yeah.
would pack ourselves. And the UPS driver, his name was Will, would come and help us pack. It was back in the day, so
Yeah.
we knew how to do that. But really, what started to accelerate the growth, we started to say, let's hire additional people. And really,
Hmm.
there's only so much we can do. So we started hiring people. First, obviously, we started hiring salespeople, and
Hmm.
then we started hiring sales support and shared services. But
Yeah.
when we really started to see accelerated growth was when we started to hire people that weren't necessarily directly related to sales,
Hmm.
like a VP of sales or a marketing director. And those were the
Okay.
two positions that really where we started to really see acceleration was when we hired a marketing director who started creating marketing tools for Stran. Like this is
Hmm.
for Stran. Here's what we do. So before everyone would kind of make it on their own, now we had someone who would make templates, have a structure, redo our logo, just make sure all our messaging was there, as well as a VP of sales then who came in and started to say, all right, what are the salespeople doing? What's our value proposition?
Hmm.
What really do we need to challenge ourselves on to offer our customers so that we're differentiating ourselves? That's really started to see that growth because there's only so much a salesperson or a group of or one person can do. But when it's
Yeah.
multiple and someone managing that, it really starts to help. So that's where we really started to see acceleration.
To start to take off. One thing I remember from our discussions, because we did a profile article on you that's in Counselor Magazine and at asicentral.com/news, and that stood out from the interview too is that you folks were involved with web store development fairly early in the game. Right? I thought that was just a kind of a cool side detail from your early story. That like the late '90s, early 2000s. How did
Yeah,
that
late
come about?
90s. Yeah, late 90s. We started doing and even more shockingly, it was for international programs. So our
Okay.
first two web stores for international companies that had they were headquartered in Boston, but they had international needs.
Mhm.
It was Boston Scientific and Fidelity were the two, and
Okay.
we launched web stores that we built on PHP. We had hired some local people. I actually kept in touch with some of the people that I worked with in the high tech PR industry,
Okay.
and they said, hey, we should offer them this online store solution. So in the late 90s is when we launched our first store for international shipments and started doing it. So we've been doing stores for I don't, 20 plus years,
Yeah.
and have used all sorts of industry solutions as well as our homegrown solution where we are right now, built on Magento. But we still take advantage of some industry offerings as well.
Yeah, very, 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 very cool. Just to see how ahead of the times in some way. I mean, really, not a lot of people were doing that at that time. So it was just a cool. I thought a cool side detail from kind of your early story. But so we're at a point where we've gone beyond just hiring salespeople. We're bringing in people to build structure in a way and people to support sales efforts. So it really starts to take off and grow. Were there certain industries that you were kind of keying in on? Was it across industry? How did that client profile look?
So we're not really specified in one industry. We are
Mhm,
strong in a couple. Beverage, we're very strong in. That's one
mhm,
that we really got into in the mid 2000s, where we started to see an opportunity in the beverage space, uh, specifically beer, wine, and spirits.
mhm.
That, but we also did a great program for Share a Coke and some personalized things for Powerade and Coca-Cola, and had a license through that. So we really were strong. We started getting into the beverage space and saw a huge opportunity in there, not only because that industry uses so much branding to help
Yeah,
sell their product.
yeah,
And there's also demand for it, but also because you can specialize to that and start to offer things that are, that they use specifically in that industry. So beverage is one very strong industry. Healthcare is another very strong industry that we started, Boston, there's a lot of hospitals here, and
okay,
a lot of
yeah,
really good hospitals. So started
yeah,
getting into healthcare for hospitals and for insurance providers, and then financial and professional services is another large one. Again, there's a lot of mutual funds and banks in Boston, so we're very strong in those categories. And then we come into retail as well is another category, and those are really, we segment them, but not so segmented that our teams are separate. Like some people
hmm.
cross over different verticals, but some are more specialized than others. But those are really the verticals that we're really strong in.
All right, awesome, cool. So we're at a point where Strawn is hired, you've got a strong sales team, you've got this diversified client portfolio, and you're growing. And I should stress this too. You've been profitable now every year that you've been in business. This pre-public, and but you're at a point where you're like, boy, we're a strong company. We're an eight-figure company, but we really think we could be more. How do we get there? And that's where this whole thing of the idea of going public kind of comes up. Can you just take us? I'd love to hear just about the behind the scenes to that, what those discussions looked like, and how you said, hey, how do we really grow this to this next level? And is going public an option?
Yeah, so one of the things that we looked at is we felt that there's such a tremendous opportunity with this industry. Most people don't know it's a $26 billion industry. They
Yeah.
think they think, oh, trinkets and trash and pens and hats, like it's it's kind of doesn't get the gravitas that some like a traditional
Okay.
advertising does. But I always say to people, like, this industry, this is the only form of advertising where people actually appreciate the advertising. They like
Yeah.
it.
Yeah.
It's not invasive. It's
Yeah.
actually, they have a favorable attitude of the branding. So I think there's a tremendous opportunity within the industry because it's so fragmented. There's so much opportunity to really try to differentiate ourselves. So
Mhm.
we would always say, if you had unlimited capital or unlimited, what would you do? What would we do differently? How would we do it? And we always thought about it. And at some point we said, we really want to, like, these are the things we've thought about for 25 years.
Mhm.
Let's go do it. Let's change from a lifestyle business
Mhm.
to a growth business where we're held to a different standard, where we
Mhm.
are, it forces us to be more disciplined. It forces
Mhm.
us to be more visible, more transparent, to tell everyone, hey, here's what we're doing. I mean, a lot of people that I speak to within the industry say, boy, I I don't, envy you for having to do that,
Yeah.
because I like to keep things, I don't like people knowing what we're doing. And
Sure.
for us, we're saying we look at that as a benefit and a value to our company because it forces us to be more disciplined. So when we started
Okay.
looking at different things to do, we said, uh, you know, I'm not. We weren't ready to sell. With we're still trying to build something. I mean, we had
Mhm.
27 years, which was the beginning of our company, and it's almost like a rebirth now, where we're doing it completely differently.
Okay.
So now we're looking at, how do we go and make the change? We looked at, we could sell, but we're not done with what we want to do. We looked
Okay.
at going to private equity, and we didn't feel like they were aligned with our goals to really become a true leader in the industry. They were more
Okay.
interested in, the ones that we talked to. I'm not saying all private equities this
Mhm.
way, but where we just felt like they were looking at the balance sheet and the income statement and the financials, and not looking at building a company, more like
Okay.
building the balance sheet
Okay.
to flip it in 3 years and say,
Okay.
here's what we're looking to
How
do.
much are
And
you going to make us in 3 years, and how are you going to do
and
it?
what's our exit plan, and what's our
Yeah.
exit strategy, and how are we going to cram all of this into 3 years so that we can have an exit? And
Mhm.
it just, we've been doing this for so long, saying we don't feel like that's the right approach. We want to build something more unique, more special, that we're all proud of, as within our company and within our industry, of here's what we're doing, not just a quick hit. Like, we
Mhm.
were looking to build something. So I had served on a couple of boards of other public companies and had other friends within the public markets, and they really said, boy, there's no really other public companies on major listed exchanges. This is the only thing that they do.
Mhm.
And you guys have a great story. You have a business that's been in business for 27 years. You're making money. You have an established business. You need growth capital. You've done an acquisition that was successful. You've continued to grow. Like this is a
Mhm.
good story that people will like.
Mhm.
And we went out and started telling it. Investors were like, this is a really good story. We like this. We like your business, like that you're involved in it. You've been in this business for so long. Um, we think we can raise you capital after talking and going on like a test the water meetings
Yeah.
with industries. So then we took it from there and we're able to execute on it.
Yeah. I think there was a good point. I don't want to be lost in there, that the fact that, that you're that long involved in this industry, and that founder of the company and still running it and very actively involved in running it is, I think, is something that investors look to as well, right? Like stability at the top and experience and ability
Yeah.
to run. You weren't somebody brought in 2 years ago to do this.
Yeah, I do, and I do think this industry is very unique. That having experience within this industry and knowing some of the nuances with it, knowing some of the players, it seems in theory it seems pretty simple and basic. Like, oh, there's a supplier base and a distributor base. You buy from the suppliers and you sell, and
Hmm.
it's pretty, buy something for $1 and sell it for $2, and that's the end of it. But there's a
Right.
lot more.
If only it was that easy.
Yeah, there's a lot more to it, especially
Yeah,
as you scale and grow and offer technology solutions, fulfillment, inventory funding, funding transaction orders, importing. There's just a lot. We all know there's a lot more to it. So,
for sure.
um, I think people like that, saying, "All right, you understand how this is, and you believe in this industry, and believe in the products that you're doing, not just coming in as a hired hand."
Makes sense. Makes a lot of sense. So, hey, it's full go now. You decide we're going public. You've tested the waters. That's kind of part of the process, but there's more to the process. There's the S1 form, right? For the SEC. Maybe you could tell people just a little bit about that, and even more broadly, what was involved once the decision was made to go public. What was involved in getting there?
Yeah, there's a lot of with the public. There's just going public. There's a lot of planning and information gathering first,
Mhm.
and that's for both legal and accounting. Because when you're going to the public and saying we want you to give us money to invest in the company, they want to know exactly what they're investing in. So,
Mhm.
first thing we had to do is gather data, and then we had to get an audit done on our financials. And the audit, and it's called PCOB, which is public accounting audit, rather than
Mhm.
just a regular audit. So we had to get an audit done for our 3 years financials, which really tested to make sure exactly what we were saying is exactly what they're investing in. And then we had to go from a legal perspective, is present that in what you said was an S1, which is really a novel, I think it was 186 pages of
Yeah.
long form, about what our business is. Not only our history of our business, how we got started, but also what the industry is, what our growth strategy are, what we're going to use the money for that we're raising, what our historical financials, just everything in there that people can read. And I encourage people, go and read that. Go and read our financials. It gives a lot of insight in there. We're not hiding anything. It's great. There's nothing in there that I don't want people in our industry reading. I'd love for them
Mhm.
to read it and learn. So you can go read our S1 that talks about that. You can read our quarterly and our annual filings on the Edgar database. It's the SEC database. You can go read it all right there.
Yeah.
And I encourage people to go read it because it's interesting, and you start to learn from it. So,
Yeah.
so that took us, about 6 to 8 months to
Okay.
collect all the data, write the S1, submit it to the SEC for approval, submit it to NASDAQ for approval, make the adjustments, go to the investors, and then finally do the IPO in October of 2021.
So I just got to ask you, put business aside, just on an emotional level, what was that like when you after to see your company go public and list?
It was pretty surreal. The only difference with it is there wasn't like a finite. It was a little bit more drawn out than we thought. So we
Okay.
originally went out. The interesting part was we originally, when we decided to go public, we originally went out to, and our goal was to raise 15 million.
Hmm.
We raised 15 million within the first few hours, and then we did what's called a shoe, where we raised another 5 million because people were so interested.
Wow.
So we maxed out our first IPO and raised just over $20 million, and investors still wanted to invest at the time. So 6 weeks later, we did what was called a PIPE, a private investment in a public entity,
Yeah.
where we raised another 20 million. So we raised 40 million total
Yeah.
because people were interested in this story. A lot of people in the micro cap, which were in companies under 250 million, I think is micro cap. A lot of them didn't necessarily have the story we had. They have an
Okay.
idea, or they had a startup, or they had a concept. We had a business, an operating business that had been profitable. So people really liked the story, as
Mhm.
well as the industry. I mean, we look at the industry and say, this is
Yeah.
$26 billion industry, and there's only two people that are either a billion or close to a billion. So there's
Right.
a lot of opportunity.
There's a lot of
Um,
opportunity to gain market share, and that's attractive.
yeah,
And yeah. Very, very, very cool. So, all right. So you go public, you're there, but and in some ways it's like, all right, we've arrived, but really you've arrived at the beginning, right? Like that's the beginning, if you will, of the next chapter. So, since then you've been very active making acquisitions. I think that's been a very key part of the long-term growth strategy. If I'm not mistaken, you've acquired 4 distributorships since going public. Can you
yes.
just tell us a little bit about that? Because I think it's interesting because there's a definite strategy behind the acquisitions. It's not just buying companies to buy them or to buy sales books. Can you just talk about the companies you've bought and what your focus is there?
Sure. So the first company we bought was before we went public, was a company called Wildman Imprints in Indiana, and we bought that company. They'd historically done near maybe 8 to 10 million in revenue,
Okay.
and we went out. We wanted to expand geographically, so that was a
Okay.
great fit. So we did that, and that was our first acquisition, and that was another reason why we decided to go public. We saw that was that was accretive, and it was
Mhm.
you know good for our growth of our business, as well as accelerated our expansion. So
Okay.
that was another reason. And then after we went public, there was 4 companies. There was a company here called Gap, and they were very strong in the beverage world. So we talked
Okay.
about our beverage
New
offerings.
Hampshire company, right?
They were in Massachusetts, northern
Massachusetts. Okay. Excuse
Massachusetts,
me. Yeah.
but they had a great reputation. I've known them for years, and we always said that'd be great if we could buy them. And the opportunity presented itself
Okay.
to acquire them. Gail Perano was their founder. She's amazing. She's still part of Stran, and is very well connected within the beverage industry, and knows her stuff. So, but she was ready to move on. So
Mhm.
that presented itself. We added on Gap. Great company, expanded our footprint within the beverage vertical
Yeah.
even
Where you're
further.
already strong, so that makes a lot of sense there. Yeah.
Exactly. And then the next one was a company called Trend. We wanted to expand into the Western territories, and
Hmm.
they were in Houston, and they also have some niche fulfillment opportunities. So we use the 3PLs for our fulfillment generally right now, or we had, but when we bought Trend, they had their own warehouse, and now we're taking advantage of that as well. And then we brought Premier, which was a company in New York that had a lot of professional services, legal and accounting, very strong in that. Again, we're very
Okay.
strong in that industry. We wanted to expand that even further.
And
And
it
then the
doesn't hurt to
latest
have a
one,
foothold in New York metro area, I'm sure. Yeah.
exactly. And then the
Yeah.
most recent one was TR Miller, which I say when we closed on TR Miller, it was a great day for me, because when we started, Tom Miller was
Mhm.
an established business in Boston that we went and kind of said we hope to be that someday.
Okay. Yeah.
So like we looked at TR Miller and said, wow, that's the company we want to be. And it
Mhm.
was somewhat surreal when we actually bought them, because we said, if 27 years ago you would have told me we would be buying TR Miller, I would have never believed it. Like,
Yeah.
because we really
What an
modeled
incredible
ourselves.
like full circle and
It
then
was,
some
and
kind of story.
Tom built
Yeah.
an amazing business with
Yeah.
TR Miller. Great, again, a great reputation. They have 25,000 square foot warehouse that we're starting to take advantage of
Okay.
already,
Okay.
with in-house decoration capabilities. So really to look to go a little bit more vertical,
Yeah.
where we're not going to abandon our 3PL model, because we find that works for a lot of situations, but where there's opportunity for us to bring it in-house, where we have a little bit more control, and maybe on more specialty projects we're offering that. So so that was looking at those 4 acquisitions that we've done, and we're still active in the acquisitions area right now. We're just since we've done 4 in less than 18 months, we're being a little bit more selective and really concentrating on integrating those, because our model for the integration for these companies is not to have them as separating operating businesses. It's really to have the same, we're not looking to go with a franchise model or just bring people on and say, you operate independently. We really want to combine forces and become one business and really have that value prop, so that when we go to people and say, this is what Stran is about, this is what value we deliver, this is why it's easy to do business with this, and you're going to get the same level of service and product offerings across our organization, is really what we're trying to do. So part of that is right now is integrating all of those. And I feel like we're doing a good job, both culturally, systems, and from a service perspective.
Very, very interesting stuff. So the acquisitions are obviously been a positive since going public. Another positive is, and we should emphasize this, is that you've seen organic sales growth as well. I think the first quarter this year being 2023, I think organic growth rate was like 17.7% for the first quarter. So so you are seeing organic sales growth too.
Yeah, and I do want to point out that acquisition is not our only growth strategy. I mean, obviously, and organic is, because when we acquire these companies, eventually they will become part of Stran, and we need to see organic growth from them. So in 2022, our overall growth was 49%. Out of that, 32 was organic. So we're not, so seeing 32% growth organically, it means that
you're not just buying revenue. We're not
just buying revenue and saying, we lose, we may not be growing this business, or we're going to, lose market share over here, but we'll just go buy it. We're saying, no, we want to build it and then tack onto it, build it, tack onto it, build it, tack onto it. So, and our ideal opportunity for acquisitions is to take a company that we think we can help grow and capitalize on, and say, if we add on some of our resources from marketing, creative, purchasing, operations, fulfillment, whatever we have, technology, whatever it is that we have, that we can grow that business.
Interesting stuff. All right.
So we, it's getting more, but we literally have, in our investor deck, again, we have a 5-part of growing. It's getting more business from our existing customers, finding new customers, offering more products and services, advancements in technology and acquisitions. Those are our 5. It's very, again, we're very structured. We're saying this is what we're doing.
Yeah.
This is what we're doing. This is how we're doing it.
All right. So sales are growing very well. The business has been good. Prior to going public, 27 straight years of profitability, right? But since going public, and this is we got to acknowledge it, right? As you say, it's out there.
Sure.
The company is not, generally speaking, been profitable. 2022 was not a profitable year. There's reasons for that, and I think it involves long-term vision and getting where you need to be to execute on that long-term vision. But rather than have me expound on it, can you tell us a little bit about the lack of profitability, why it's been that way, and kind of where you see things going?
Sure. So in 2022, we lost a little over $700,000 was our net loss for the year on what we are in our SEC filings was just under 60 million in revenue. If we add in, and people have asked us that but you say you're at 64 million, it's because some of the acquisitions we made weren't till the last half of the year. So if we include that, we were at just under 65 million, but on our SEC filings, we're at 60 million. So we lost 700,000, but I do want to make note, we did, in Q4, we did have a $900,000 profit on 18 million. Yeah. So we did turn it around, but the beginning of the year, we're not used to having a loss. Like I'd said, for 27 years, we were profitable. It's not that we intended to have a loss, but we consciously made investments into the future of the business. And those investments were infrastructure. So we have lofty goals where we want to go. What got us to where we are right now is not going to get us to where we need to go. And we know that. And that's building infrastructure. And what does infrastructure mean? It's adding management and adding people that can hold people accountable and make sure that we're growing responsibly. That's the first one. The second one is technology. That's a big one. Investing in technology. We're in the process of onboarding NetSuite as our ERP, which is very time consuming and challenging, but it's integral to our future. And then the final one is investing in processes, making sure that there are specific processes as we add acquisitions, as we add more people, as we continue to grow. We need to make sure people are following processes without being so rigid that we're not taking customer first. So our core value, our core values as a company revolves all around client first.
Okay.
We establish those processes around the client, not around what works for us or what works for the clients, but having that flexibility, but also being more efficient. So, those are the things that we invested in, as well as ongoing public costs. So ongoing public costs, whether that's directors and officers insurance, paying our board members, legal, accounting, regulatory, NASDAQ filing fees, NASDAQ listing fees, SEC fees. There's just a lot of fees in there. And absorbing that into 30, 40 million in sales is a lot harder to do than absorbing into 100 or 100 million plus. So those are some of the things that almost intentionally we're saying we're building this business for scale. We're building it to grow. We're not just trying to grow our business, we're actively doing it. So it takes money, it takes capital. Obviously, we've put measures in place for a path to profitability of how to get there. We have a 10 things internally that we go over, on every month, that these are the ways to increase that profitability, and we're working on it. But again, we look at right now the industry, the macroeconomic trends as an opportunity to expand when some others may not be. So we don't want to look at profitability at expense of growth. We really want to grow and try to balance the two of them so that we can get to over 100 million in revenue and start making good profit after that.
It's kind of like, and this is probably a real corny analogy, Andy, but like it's like you got to build that skyscraper, right? You got to have that really great base, that really great foundation, right? And you can't cheap out on that. You have to make sure that is ready to go. And once you get that in place, the subsequent floors start to go up a little quicker.
And we're aware of that. Like, investors look at it and say, we want you to make money. We want you to grow at 50% and grow your bottom line at even a higher rate. And we're aware of that, and we know that we need to do that. It's just, again, balancing how much we want to grow top line versus bottom line, and when to balance that. So we're very aware and cognizant of that.
Yeah. So the long-term prognosis is good. You see that top line revenue growth continuing, and eventually when these infrastructural things are in place to the extent that you want, it could really be a build out that leads to greater profitability.
Yeah, I mean, we could turn levers at any moment to show profitability, and if we were private equity based and they were looking for an exit, they'd be doing it right now.
Yeah.
And we're not, but I'm not ready for that. We'd say no, let's continue to grow. Not only, do I want to see the company, well, I'm competitive. I want to see us be a leader. I want to see us really, I want to prove anyone wrong that's saying, why would anybody ever do that? That's crazy. Or go, and a lot of people are probably saying, who's this? I've never heard of these people. How did he win person of the year? Like, I don't understand. And I want to, and that's why I really appreciate the recognition, but also, carry a lot of that on my shoulders to say there's a lot of responsibility now to go represent the industry and say, we want to get more exposure. We want to show more people that this industry is a great industry that's extremely effective. Use this form of advertising to help you. So, I'm excited about that.
Yeah, great stuff. Little housekeeping item here. I just wanted to point out, because we mentioned Andrew earlier in our discussion. Andrew is, of course, your college friend, longtime friend, still a friend. Co-founded the company with you. But Andrew, since he exited the business, as in terms of day to day, I believe he's chairman now, right? But
so
in terms of day to day running, he hasn't been there for about a decade, right?
Maybe about a decade. He was involved. Probably the last 5 years is really where he's been involved in other ventures. He's still been involved with the business at a high level. And like you'd said, he's the chairman and is still a large shareholder, the largest shareholder. But from a day-to-day operational standpoint, no, he's not really that involved in the company. He's more involved at a high level strategically. We keep in touch, almost daily. But he lives over in Europe now and has 3 kids and has been involved in a lot of other opportunities for himself that he's done very well with that. So, he's kind of gone in that direction a little bit. And it has, still involved in the company and wants to see us do well and strategic about making introductions and and being involved, but in terms of operational, no, he's not really involved in that.
All right, great. I just wanted to just get that
Yeah.
on the record. And I'll ask you one final question here. Thank you again for your time. This has been a great chat. I love how candid you are, and you know you address everything head on. It's a fun discussion. So just what are your predictions for the future of Strawn, and then even just the promo industry more broadly? Because even as you've mentioned, like you care about this industry, you want this industry to do well, not just your company. You want this industry to thrive and grow. So just where do you see things going for the company and the industry?
I think our company and the industry are both the same. I think there's going to be a lot of opportunity. I think there will continue to be consolidation, and there's going to be a lot of that through technology and processes and ability to fund growth. As interest
Mhm.
rates are going up right now, I think some companies may be getting a little squeezed to say, boy, I used to be able to borrow money for our working capital at low rates, and now it's 8, 10, 12%, makes it a little bit more difficult. So I think there will be some consolidation out of necessity, not necessarily because companies are bad companies, just harder to do business
Yeah.
potentially. So I think there will be continue to be consolidation, as well as the technology haves and have nots.
Mhm.
I mean, technology is a huge piece of our business, not only front facing, customer facing technology, but back end of how
Yeah.
we work our business through internally. So investments in that, I think, will start to differentiate the haves and the have nots. And I see Strawn continue to make investments in technology to continue to acquire companies that work with our strategy, both geographically, by industry, or by some sort of value proposition that they can bring to us. And I think that's going to happen within the industry. So for Strawn, I think we'll continue to grow our revenue, continue to see advancements in profitability over time.
Mhm.
And just continue to become a leader, and adding more customers, more valued people, and just continuing with what we say we're going to do. And then the industry, I also think the industry has an opportunity, as we get inundated with other forms of advertising, to go back and really promote this stuff actually works. Again, like, people get inundated with ads on YouTube, email,
Yeah.
online, social media, all that, and they become numb to it. But if they take the time, if advertisers take the time to go make a personal connection through something physical, branded,
Mhm.
that someone appreciates, it can be very effective and very valuable. So I think it's our job and within the industry to not only promote ourselves, but promote this form of advertising, because it can be so effective. And a lot of people don't necessarily recognize that. So I think we have an opportunity to as the industry, to really promote that even further. And I'm excited to watch that continue to grow.
Awesome. Awesome. I'll want to leave everybody with a little anecdote, because part of what we do, part of the reason we select someone as person of the year, is because we see them, as a bit of an inspiration, or someone from which inspiration can be taken. And there was a cool story shared with me by Jeff Nanis of AAA, Supplier AAA Innovations out of New Jersey. And he recalled coming to see you and Andrew, up in the Boston area when you guys were just starting out, and you were, I think, above a Meineke or some kind of auto
Midas,
body shop in
Yeah.
like a little cramped space. And he's bringing his umbrella samples up there, and he just had this impression. He's like, I think these guys are going to make it. Like, these are humble beginnings, but these guys are ambitious and they're smart. I think they're going to make it. And you fast forward 20 something, almost 30 years, and you're running a $65 million company that's listed on the NASDAQ. So that's where this industry can take you, or where you can, or rather, I should say, where you can take this industry if you approach it in the right way. So I think I think your story is a cool and inspiring story, and I hope everybody would take a little heart in that. Yeah.
Well, thanks. Yeah, Jeff.
Okay.
Thank you, Jeff. Yeah, he came in. He didn't mention the dogs that we had in the office as well. The multiple dogs that we had.
Yeah.
Yeah, it was those were different times. Fun, challenging, but rewarding looking back on it. So it's been great.
Awesome. Very
Yeah.
good stuff. Andy Shape, Strawn and Company, 2023 Counselor Person of the Year. Thank you so much for chatting with me today. It's been a lot of fun.
Thanks, Chris. Thanks everyone else. Yep. Bye bye.